Welcome to the deep dive. We've got a fascinating stack of sources here on FSMART today. I mean, this company seems to be right in the middle of a huge shift, and its stock price, well, it recently jumped over 9%.
It certainly caught a lot of attention.
Exactly. So our mission today is to really dig into all this data, the financials, the analyst talk, and figure out what's really going on with FSMART's strategy. Make sense of it all for you listening.
Right, cut through the noise.
Let's dive in. So, FSMART. When you hear the name, I think a lot of people, myself included initially, just picture those boon term kiosks, right?
Yeah.
Everywhere across Thailand.
That's the traditional image for sure.
But looking through these sources, it's clear they're becoming something much bigger, more of a diversified financial and tech player. What's really driving this change? What stands out?
Well, what's really key here is the evolution. They're moving from just being, the kiosk guys to building a whole platform. Their vision, something like sustainable innovation for a better life. It sounds like marketing speak, but it actually reflects their strategy.
How so?
They're aiming to be the central hub, connecting customers to all sorts of services, 247 nationwide. It's not just top-ups anymore. It's becoming much more fundamental to daily transactions for a lot of people.
Okay, and this strategic shift, it's not just talk. It's showing up loud and clear in their latest numbers. Let's jump into part one, performance and financials. Starting with Q2 2025.
Right.
FSMART reported, get this, a net profit of 155.32 million baht. That's up 53.22%. A huge jump year on year compared to Q2 last year.
Massive increase.
And revenue, also looking strong, 687.89 million baht, which is up 16.12% year on year. So for you listening, what's the big takeaway from these Q2 figures? Is it just good growth or something more?
It's definitely more than just good growth. I mean, the most impactful thing is that this profit figure is a new high for them, a quarterly record.
A new high.
Okay. Yeah, it signals that this transformation we're talking about, it's actually working. It's hitting the bottom line, and it seems to be accelerating. And if you look at the first half of 2025 overall, the picture is just as good. Total revenue, 1,368 million baht. Net profit, 308.07 million baht. That profit is up an incredible 58.14% from the first half of last year.
Wow, 58%.
Yeah. And their EPS, earnings per share, basically profit per share, outstanding hit, 0.41 baht. Also a new high for the first half, so consistent record-breaking.
New highs definitely grab headlines. But okay, digging a bit deeper, what about valuation and financial health? Analysts are talking about the PE ratio, price to earnings.
Right, a key valuation metric.
And the estimates are kind of varied, but seem low, around 10x. Yuanta says maybe 8.7x for 2025 earnings. AIO mentions 11.29x. The feeling seems to be that's pretty low given this growth, right?
That's the interesting question, isn't it? Is the market fully pricing in this potential?
Yeah.
Because while the PE might look modest, you look at other metrics like return on equity, ROE.
Okay, what's that telling us?
It's telling us they're incredibly efficient with shareholder money. The ROE is way up there, 38.43%. Some estimates are even a bit higher. Return on assets, ROA, also strong at 22.03%.
And the profit margin?
Net profit margin is solid, 22.53%. So for every 100 bond sales, they're keeping over 22 baht as profit. And get this, that lending business we'll talk more about.
Yeah.
Its net profit margin in Q2 was a staggering 48.3%. Almost half the revenue turning into profit.
48%, that's huge.
It is. And crucially, their debt level is really low. The debt-to-equity ratio, DE, is only 0.66 or 0.7x. Compare that to the finance sector average, which is usually around 2x or 3x.
So they have room to borrow more if needed.
Exactly. Loads of room. It suggests really strong financial health and flexibility for future growth without being dangerously leveraged.
Okay, so the numbers are strong, the balance sheet looks healthy. For someone trying to grasp why, what are the main engines firing this performance? I'm seeing two big things mentioned. The lending business taking off, and something about depreciation costs on the old kiosks.
You nailed it. Those are the two key drivers right now. And that depreciation point is actually quite clever.
How so?
Most of those boon term kiosks, the ones everyone recognizes, are now over 8 years old, which means, from an accounting perspective, their initial cost has mostly been written off through depreciation over the years.
Okay, so they're not costing the company as much on paper anymore.
Precisely. This isn't just some accounting trick. It directly saves the company about 100 million baht a year. That cash flow goes straight to profit, boosting those margins we talked about. It's a really good example of how managing assets well over the long term pays off.
That's fascinating. The old kiosks are still contributing significantly, just in a different way now. Okay, let's shift gears into part two, business outlook. FSMART clearly isn't sitting still. They've got this strategy based on 3 core pillars, moving way beyond just kiosks. Let's break them down. Pillar 1, the foundation.
Right, the foundation is still Pillar 1, Boon Term kiosks. And it's still a powerhouse. Over 120,000 kiosks across Thailand. Think about that reach even in remote villages.
Yeah, they're everywhere.
They serve about 15 million active users. And many of these users, they still prefer using cash. It's a huge part of the economy. This pillar alone brings in 70–75% of total revenue.
Still the lion's share then. What's next for the kiosks?
They're not static. Plans include launching 1 or 2 big new services by late 2025. They also want to add at least 1 more bank as an agent. They have 8 now. Services already cover mobile top-ups, bills, e-money, insurance, transport cards, even mini ATM functions like deposits and withdrawals.
Pretty comprehensive.
And they're looking at features for migrant workers. The CLMV group, Cambodia, Laos, Myanmar, Vietnam, plus potentially cross-border transfers to Myanmar, though that needs regulatory cap. So, yeah, maybe minor hiccups from floods or border stuff sometimes, but overall, it's a stable cash cow.
Amazing how resilient that old model is. Okay, pillar 2. Financial services. This is the one everyone's calling the new growth engines. Sounds like they're really going after a specific market here.
Absolutely. This is where you see that S-curve growth potential. The focus is micro-lending, specifically targeting the underserved. Think farmers, laborers, even government workers like the village health volunteers, Noor or Sornmore.
People who might struggle to get a loan from a regular bank.
Exactly. FSMART uses its massive Boon Term network and all the customer data they have to build trust and make access easier. The loan portfolio is already substantial, around 1.47 to 1.5 billion baht as of mid-2025.
And the growth targets?
Ambitious. They're aiming for 2 billion baht by the end of this year, 2025. And then a huge jump to 10 billion baht within 3 to 5 years.
10 billion, wow.
Yeah, it already accounts for 10–20% of total revenue, so it's growing fast. They offer cash loans, loans for buying appliances or phones, special farm loans, even small loans against car registration, up to 30,000 baht.
How are they managing the risk? Microlending can be tricky.
They seem very aware of that. Their approach is cautious lending. They actively manage NPLs, non-performing loans. Currently around 3.5%, but they're aiming for under 3%. They use AI for credit checks and have their own debt collection team. Plus, for the government workers, they could arrange direct salary deductions, which lowers risk significantly.
Makes sense. And they're setting up a company to handle appliances.
Right, FSMART merchandise. Should be running by Q3 this year. It lets them source and distribute the appliances and phones directly for those loan products. They also plan to partner with a few storefronts by Q4 to widen that distribution. It's quite an integrated strategy.
Very integrated. Okay, that brings us to pillar 3. Automatic vending and future services. This feels very forward-looking. We're talking Taobin drinks machines and Jinka EV chargers. Let's start with Taobin.
Right, Taobin, the smart beverage vending kiosks. They had around 7,000, maybe closer to 7,300 in Q2 2025. The goal is 10,000 by year end, and then 20,000 in the next 3 to 5 years.
Big expansion plans. How does FSMART fit in financially?
They own about 26.7% of Fourth Vending, the company that runs Taobin. So FSMART gets a share of Taobin's profit reported in their earnings.
How's Taobin actually doing? I saw some notes about a sales dip.
Yeah, there was a slight dip in the first half of 2025, sales down about 2.4%. They put it down to the economy, high living costs, even some temporary things like an earthquake near a factory and school holidays impacting locations.
But they're still innovating.
Oh yeah. New menus, smarter tech in the kiosks. They've launched a Taobin Cafe concept at their headquarters and plan another. And they're rolling out Taobin pan machines for fresh fruit smoothies, starting with Thai mangoes actually, working with the Ministry of Commerce.
Interesting. And going international too?
Yep. Singapore already has 50 kiosks doing decent numbers, around 50 cups a day per machine. They're also looking at Dubai, Australia, and Malaysia.
Okay, and the other part of this pillar, the Jinka EV chargers.
Right, Jinka Charge Point. Still smaller scale, but growing. They had 428 charging points in Q2, aiming for 1,000 by end of 2025, and then 10,000 within 3 years.
10,000 EV chargers. That's a big bet on EVs.
It is. Right now, it's only 1 to 5% of revenue, but the potential is obviously tied to EV adoption. They offer both the slower AC chargers, good for condos or hotels, and the faster DC chargers, like 40 kilowatters, better for malls or restaurants.
And they're easy to use.
Supposedly very easy. Designed so you don't need to download an app, which can be a barrier for some people. The long-term potential is definitely there, but they seem to be expanding carefully, matching the market growth rather than getting too far ahead and losing money. Prudent expansion.
Okay, so 3 pillars, each with its own strategy. Looking at 2025 overall, the CEO seems confident, targeting 10–15% total revenue growth for the year. What are the big factors, the key growth factors, positive and negative, that could swing this?
Right. This is where external stuff really comes into play. On the plus side, there's hope pinned on new government economic stimulus. Things like the Con-la-Crane co-payment scheme could boost spending, which helps boon-term transactions.
Indirect benefit.
Exactly. And more directly, the government's plan to increase pay for the village health volunteers. That directly helps FSMART's key lending group.
Ah, interesting connection.
There was also that stock price jump over 22% shortly after the new PM was voted in. Suggests some investor optimism about, let's say, favorable political wins. And internally, FSMART gets a big boost from being part of the fourth group. Access to strong R&D without massive upfront costs. Plus, their deep experience with grassroots customers and automated kiosks is a real advantage. AI helps too in credit analysis and managing the kiosks.
And any potential game changers?
Well, there's talk about the government's lottery for retirees. If, and it's an if, that gets sold through boon-term kiosks, that could be huge news. A major boost for Q4 and into 2026.
Okay, lots of potential positives. But what about the challenges, the headwinds?
Definitely risks to consider. The slow economy and high cost of living are already hitting Taubman sales, as we saw, and means they have to be careful with lending.
Right, the NPL risk.
Exactly. Lending always carries NPL risk. They're managing it, aiming below 3%, but it needs constant watching. And hitting those huge loan growth targets takes capital. They need the funding to keep expanding the loan book.
Makes sense.
For the EV chargers, the risk is timing. Expand too fast before EVs really take off, and you're stuck with underused assets. And then there's the dividend policy shift we touched on.
Yeah, the reduced payout.
They've cut it back significantly, from maybe 80–90% historically down to 40–50% now. That cash is being plowed back into growing the lending business. It's a strategic move for long-term growth, but it does mean less cash back to shareholders right now, something you as an investor need to be aware of.
A clear trade-off. Jam today versus more jam tomorrow, maybe. Okay, let's move to part 3, analyst and technical views. How are the pros seeing FSMART? Yuanta Securities, for example, likes it, calls it accumulate.
Yeah, Yuanta sees it as undervalued, especially for a mid-cap stock with this kind of growth story. Their projections are pretty bullish.
What are they forecasting?
For 2025, they estimate net profit hitting $600 million ball. That's nearly a 40% jump year on year, with an EPS around 0.80. For 2026, they see profit growing another 20%, pushing EPS towards $1, mostly driven by that lending expansion.
And the valuation?
They figure it's trading around 10x, that estimated 2025 PE, which, as we discussed, they think is attractive given the growth in management. There's also that local analyst, Deck New, who suggests the price shouldn't really drop below 8 BAT based on that 0.80 BAT EPS projection.
So fundamentally, it looks cheap to some analysts.
It seems that way. Strong growth, reasonable PE, but the market ultimately decides the final valuation. Whether it gets a PE of 12x, 13x, that depends on them keeping up the execution and maintaining investor confidence.
And on dividends, just to recap that change, the latest Q2 dividend was 0.18 BAT per share, yield around 3%. That's down from last year, right?
Correct. Q2 last year was 0.23 BAT, yielding closer to 3.8%. Historically, FSMART was a dividend machine, paying out 80–90% of profits twice a year, very consistently for over a decade.
So this cut to 40–50% payout is a big shift.
It's a very deliberate strategic shift. They're consciously holding back cash to reinvest it into the lending business because that's where they see the highest growth potential right now. Less income for shareholders today, but the bet is on much larger profits and potentially larger dividends down the road.
Understood. Okay, lastly, let's look at the technical analysis, the stock chart. As of mid-September 2025, it was trading around 8.65 BAT, up over 6% on the day. And you mentioned that 22% jump since early September. What are the charts telling us?
It's interesting. The longer-term trend, if you zoom out, looked like a downtrend for a while. But recently, definitely signs of a recovery, some real upward momentum building.
Any key price levels to watch?
Yeah. Analysts identify support levels, places where buying interest might kick in. Around 5.6 euro is seen as a historical base. There's an even lower low way back around 4.6 euro. More recently, the 7 BAT level was seen as resistance, a ceiling, but the price broke through that. That's often seen as a bullish signal, turning old resistance into new support.
A rebound point.
Exactly. Deck Narrow used that term too, noting it bounced off lows after pulling back a few times. So technically, things look better. But my advice to you listening is always temper the technicals with the fundamentals and the risks. Meaning, while the fundamentals look strong and the chart's improving, keep those potential risks in mind. Can they really hit those massive loan growth targets? Can they keep NPLs under control as they grow? Those are the questions the market will be watching closely.
That's a very balanced perspective. So FSMART is juggling its established base, this high-octane lending growth, and future bets like EVs and Taubin, all while managing financials carefully. The big question hanging out there, maybe for you to ponder, is how sustainable is this new high momentum? What's the next big hurdle, and which of these three pillars will truly define FSMART 5, 10 years from now? Finally, if you have any other stocks you'd like us to cover, please do let us know. Don't forget to like, share, and subscribe. It really helps support our team. Thank you.